Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, everyone. This is Gary Wilson, and welcome to this week's live real estate investing for professional men and women. We got a great guest today, Curtis May, who will introduce in just a moment. But just to remind you, welcome to the podcast, obviously. And if you haven't subscribed yet, please go ahead and feel free to do so. It doesn't cost anything, obviously. It's on 30 some odd channels now, Stitcher, iTunes, iHeartRadio, being downloaded in over 30 countries. So join the crowd. And if you really want to participate more actively with other professionals and business owners who are investing like you, go to My Investor Services and join the members area. Just click on members area and you can sign up. They give you a month for free anyways. And if you're already in, obviously tap in and be part of those conversations as we dig in deep on properties, getting the money. I mean, everything, but at our level. We're not doing the no money down, owner financing, buying the cheap, crappy stuff. We get good properties, C grade, not A plus luxury, but C grade. We invest honorably, ethically. It's win-win for everybody. You make money doing it. The community wins. It's a great way to conduct a business, and it'll help you further your own business too, by the way. So welcome aboard if that's the case, and glad to have you. So in any case, without further ado, I want to introduce Curtis May. So Curtis and I met each other through a mutual contact, and he's in Philly, and I've got my niece lives in Philly. I've been in Pennsylvania, lived there for 24 years actually altogether, and about 10% of my business is in the greater Philly metroplex. So a lot of the stuff that Curtis is going to talk about, I'm like shaking my head up and down. So Curtis, man, hey, welcome aboard. I appreciate you taking your precious time to share your knowledge with our listeners.
Hey, Gary, thank you. Thank you for having me. I'm excited to share and talk about my favorite subject, money.
There you go, man.
Keeping it.
I just kind of let the cat out of the bag as far as where you are, but if you wouldn't mind, for those people who don't know who you are, paint a picture. Curtis May, almost like you're doing like a 5-minute, story or here's who's Curtis. Because I think when you do that, it adds more context. So we get into the meat and potatoes of money and how to make money, how to get money.
Yep.
People resonate with it more,
So real quick, my background is I'm actually from Philadelphia. And I always say I'm a third generation business owner. My grandfather was in business. My father was in business. We owned a supermarket in North Philly. And I never got that go to school, get your education, get a good job talk. I'd heard from the time I was 7, maybe, you'll never make any money, work for somebody else. And so I went to college. I thought I majored in business. I thought you majored in business to go into business. So it wasn't even never my intent to get a job. I actually got my licenses to, in financial services in college. I was a junior down in North Carolina at Winston-Salem State, barely on the team. And, I realized that, okay, this whole NBA thing is not my dream. The NBA wasn't looking for 5'11" shooting guards and with a mediocre handle. So I was like, okay, we need a new thing. And so I got involved into the financial services business at 20. And but I was horrible. I'm introverted and, so I'm a product. So when I tell people you need to read a book a month, you need to focus on personal development, I'm a product of that, reading how to win friends and influence people. So that really was a major pattern for me. And so I grew to that, started to kind of figure it out. Then I would say I lost my religion, so to speak. We're living through 3 crashes, and I wanted to figure out, I was doing teachers' retirement plans in the school district, doing what they call 403Bs, and then this is 9/11 hit. And I had a client I inherited. I didn't put her in it, but this guy had her in all this spectrum stuff. She was 68. She lost like 50 grand in, I want to say, a month and a half. And then we had a meeting with a wholesaler coming down from New York, coming down from the Oz, coming to impart us with knowledge and, go sell your product that Wall Street manufactures. And I said, I told her the story. It says, the market's going to come back. I was like, what? Did I mention she was 68? And then
Wow.
I read Rich Dad Poor Dad. So I'm starting to question all of the stuff I've been hearing and, what I was taught. And then we study really rich people, what they do were completely opposite. And I was like, okay, what do I do with this stuff I'm learning? And it took me a couple years to figure it out. And that led me to what I do now, which is called Prosper Economics. So, but I'm a father of 3 daughters. And my wife and I are both self-employed. We share an office here, and I still fancy myself a basketball player. I still play twice a week at my at my advanced age, and but I still try to keep up because the stair match doesn't get done. I need to still bump people and you get my aggression out. So, but that's it. And so with what I realized was that the typical advice doesn't work, and it's actually bad for entrepreneurs. It's actually dangerous to your health. And so that's kind of, I kind of flowed into understanding that you need control. And so now what I try to share with people is that your best asset, your number one asset is you, right? And so you have to invest in your mindset, your skill set, and your network. And I believe your number one investment is a business or your business, and it's not sending money to some fund manager 1,000 miles away you've never met and hoping they're hope is not a good strategy, hoping that they'll find you this great product and take you to glory. So that's the 4-minute Curtis background.
Well, I tell you what, a couple things there. You hit the nail on the head as far as investing in yourself, investing in your own business. Obviously, my people know me from real estate. I've been investing for over 34 years and, hundreds and hundreds of properties, several thousand transactions. But the reality is along the way, about halfway through that, I started building businesses. And I built a brokerage company, title business, property management business, appraisal business, all based on that platform of real estate. And I learned this from Robert Kiyosaki. I got to meet him in person, kind of unique. And he said, you're exactly right. He said, real estate investing isn't the end game. It's the foundation upon which you can launch other businesses. And the real wealth is in the businesses, and you can leverage that to buy bigger commercial
real estate.
Or even loan money out, be a banker, lend money out to other people. Then those loans are collateralized by the properties, and you can either way you're protected. But anyways, I appreciate you saying it because most people don't see that level of it. But something else I want to talk about too is the fact that you're not only a basketball fan, you love basketball. And I got to tell you, Chris, the first pro basketball game I ever saw was back in the early mid 70s. And remember the Washington Wizards? So Philadelphia 76ers came down to play them. I'm sorry, Baltimore Bullets.
Baltimore Bullets. Yes.
And Dr. J was in the game, man. There was one play I'll never forget. It's etched in my brain. He got an errant ball passed to him. He's running down the court, took off from the top of the key, and I swear that dude was floating. He's going through the air, passing the ball around behind his back, under his leg, up over behind his head, and bam, slammed the thing. It was one of the coolest plays I think I've ever seen in my life. And as soon after that, he retired. It was probably at the peak of his career. And it was the most amazing things I've ever seen. So I'm kind of getting emotional about it because I'm a huge sports fan. I wish I could play basketball. But did you ever get this? I got to ask you, we'll get back.
Oh, yeah. I used to go to games. I mean, I was like, 8th, 9th, 10th grade. I would catch the subway down to the Spectrum.
Nice.
And it was funny because they were the top draw in the league. Yeah. The Philly would never sell out. I could never understand it. But I would get down there and I had ticket brokers where I would get good seats or I had friends that were scalping tickets that I would see from high school. Like, yo, man, I got some tickets. All right. I would try to make sure they were real and I would get in and see them. But yeah, I saw all those guys. So I would see Doc and Bobby Jones and Doug Collins and George McGinnis was still there. Lloyd, or what they call World Be Free, that whole team. And when they lost to the Bill Walton and, the year they won the championship, I was down at the parade. So that I grew up on, I had a big poster of Dr. J with this big operating table in the basketball court in my college dorm room, and the one with him dunking on Portland in my dorm room. So yes, huge fan.
Wow. Well, I tell you what, cool stuff. So what do I do now? Let's get back to you, Curtis, and what you're doing. So share with all the listeners what it is you're doing now in the world of business, and because I want them to hear this. I think they're gonna benefit from what you're doing in the world of business. If you could explain that to people, and then we'll get into maybe.
Yeah. So one of the things that I do is, so I specialize in a strategy I call it the private reserve strategy, but infinite banking. But I want to back into that from a bigger context, because one of the things that I see when I look, even if like newer people that are trying to start investing, starting a business, and really, I've got clients that are really doing well in real estate, but what I find is that people, especially if they're just starting out, they want to make quantum leaps. Like they're broke and they don't have good personal financial habits, so they want to get this big home run so that to take this quantum leap forward. And what I try to do is get people to take a step back, and I call it the 5 principles of personal finance, right?
Mm-hmm.
And so I want you got to what I call block and tackle. So the principle 1 is, you've got to save 15 to 20% or more of your gross cash flow. Okay. Mm-hmm. So that's where I don't teach, it's not about products. I teach principles like the 7, richest man in Babylon, 7 cures for a lean purse. The first chapter in Richest Man in Babylon is part of all you earn is yours to keep. Mm-hmm. Right. That's a philosophy. You got to pay yourself first. Principle 2 is, because what happens is, so now let me go there for a second. So all that means is that, listen, out of that, so just logistically, if you make $5,000 a month, let's say 10 to 20%. So that's $500 or $1,000 a month. You create a wealth capture account. I want you to literally take a separate check in your savings account, and I want you to sweep that money off of the top into that account. Okay. Mm-hmm. And then you live on 80%. So that's step 1. That is, if you can't do that, if you can't do that now, then you got to ask yourself, why can't you do that? People say, well, I want to, Kiyosaki used to say this, well, I want to invest with, how do I invest with no money down? Well, and he used to say, well, first thing you got to figure out why you don't have any damn money.
Right.
Okay. And he might have said that. He would say damn. And so that's step 1. Step 2 is, this is where people skip because they think it's a cost, is you got to have maximum protection. Right? You have to play defense. And so one of the things in our process, we have a process called Personal Financial Snapshot, and we put this into a model, but do you have, so you look at everything, your auto, your home, do you have general liability? Should you have an umbrella? Do you have proper entities set up? Do you have estate planning? Do you have disability insurance? Do you have life insurance? And so I actually will look at it. We have like little barcodes. I can show you where you're at, because I think people skip that step. And so I always tell people, life, you're going to have 1 of 3 problems. You're going to live too long, you're going to die too soon, you're going to get sick and live, right? And so what if your empire is not built yet? Okay. Or what if something does happen? Well, most people of these things are illiquid. So what insurance does is provide you with liquidity. Step 3 in that process is the Colby thing has made me think about this, full replacement of assets in the event you were to pass away. If you built this big portfolio, and let's say your spouse may not know how to run it or run that business. And so until you can get somebody to run it, if you have life insurance in place, then you have the ability to provide a pool of liquidity tax-free to help until everything settles down, because they're grieving. So they're emotionally devastated, but you don't want them financially devastated and emotionally devastated at the same time. So you've got to transfer risk. That's what insurance is. All good investors invest with insurance. If you buy property, you have property insurance. Right. If you have liability insurance, only choose 2 types of business, ones that have been sued or will be sued. Right. And so that's asset protection. So you have to play defense. Otherwise you can, predators and opportunists can steal, or what you spent your life building, and allow you to not pass it on to your family. And so you have to build legacy. Principle 4 is storage. See, the number one problem I see with business owners and families is they don't have access to capital. Yeah. Right. They're very illiquid. And so you have to have so principle 4 is, I want 6 to 12 months of liquidity. Okay. Now, after 3 months, 3 months is like an emergency fund. So over 3 months, now it's an opportunity fund. See, because if you have cash, then you don't put pressure on trying to find the next get rich quick scheme, so you can make this quantum leap. And so you have money to take care of opportunities. So that's step 4. Well, that comes from step 1, right? Saving 20% of your income. And then most people want to jump into step 5, and these can all be concurrent, but I try to get people to think about this in order so that you're building a bulletproof program, and I call it what I call a fortress balance sheet. It's still from Jamie Dimon. And so what you want to do, principle 5 is what y'all specialize in, with your tribe, is what I call velocity, right? And so velocity is now you're getting into making money, moving money through assets and making your dollars multiply. And so this is kind of where I talk against the typical advice that's given. That's why I said typical financial advice is bad for entrepreneurs, because the focus is on accumulation, what I call the accumulation theory. You need this number. Let's max out our 401k. And, if you look at the Forbes 400, nobody, or 500, whatever that is, right? Forbes 400, nobody on there max out their 401k. They don't pay cash for real estate. They don't do any of that kind of stuff. And successfully, they don't do any of that Susie Orman, Dave Ramsey stuff. Not to call them out, because they're great for their market, but they're not good for you guys, okay? And because you need liquidity, use, and control of your capital, right? And the thing I focus on in velocity is business cash flow, investment cash flow, because you want to be economically independent of your business. So those are the top 5 things. Now, what we weave into that is not to get into products, but we teach people how to use specially designed dividend paying whole life as a place to store cash. One of the questions I asked people was, where do you store your cash? And now you can store it somewhere where you can use it without using it, because you can leverage it. Like I had one of our clients, we've used that strategy. She's borrowed against her contract to put a down payment on a turnkey property in Birmingham. Right? So it's earning 4% in the policy. She's put her down payment, her cash on cash return is like 18%. And so now she's got the money, she's got the asset. She's earning the profit off what she would have given to a hard money lender for the down payment. Yeah. Her money is still making money, is paying dividends, and it's insurance. So now you've got $1 doing like 4 things. So you're creating velocity through simultaneous use. So I just say a lot, but we'll take a breath. But that's what the system we teach, because really I tell people, look, it's your money, and it encourages money, right? So it can be more important to me than it is to you. So my goal is to give people a thought process of, when money hits your personal economy, how do you deal with that? And so that's why I don't like financial planning per se, because you can't plan. What you need to do is have principles so that you can adjust, because life is very fluid. So if somebody prints out like a financial plan for you, it's wrong from the time the ink dries. Mm-hmm. You know what I mean? And so you want to have principles so that you know how to react to stuff. But so if you're have those principles down and you're liquid and you get hurt, or you're bulletproof, and so now you got to have a plan that works no matter what, and that's your foundation that you can adjust. And so once you have a philosophy about how to work, then you can, it's like basketball, you have a motion offense. Well, if they come close to me, I'm going to drive by them. If they back up, I'm going to take a jump shot. So I'm going to take what the defense gives me, And so what happens is if interest rates go up, okay? What happens is you have to think macroeconomically, which is one of the principles, right? So you need to just, beyond your microcosm of real estate, you need to understand what's going on in the world, because once you start to think bigger, you'll see storm clouds approaching that, A, you got to play defense from, and 2, you'll get an opportunity to get a steal and go down for a layup. So I really think back to basketball, right? But so you got to be fluid in terms of, hey, look, there's opportunities. What Jim Rohn says, and I'll finish this point with this, is that the winds of adversity or opportunity blow on us all, but the key is, how do you set the sail? Right. And so when they go through your training, what you're doing is, within the real estate and the business realm, you're helping them set a better sail.
Yeah.
I try to help them set a better sail because you're the captain of the ship, but you can get better. That's why I say you got to invest in your mindset and your skill sets. And then when you get the skill set that Gary's teaching you all, now if you you'll be able to attract more private money, or you'll be able to do different things because people will invest with you because you can make them money. But it's better if you're bulletproof and they know that you're sound financially. That's where Curtis comes in, right? But so it's that's a big nutshell, but that's kind of, I try to teach from a philosophical standpoint and then break it down into bite-sized implementation things.
Yeah. Well, I appreciate that. And I appreciate the example too. And I'll ask you maybe I'll give you an example of one of my viewers or listeners and see if we do like a case study on it. But one of the things I noticed, Curtis, early on in my business building career, I started attracting more affluent people, and I was becoming more affluent myself. And it's just one of those things, you kind of start attracting those people.
Yeah.
And some of the names you probably would recognize, but what I learned about them early on, this is going back probably 20 years, is every one of them had a big whole life policy. And they didn't just do it just for the insurance. It was a vehicle, just the way you just described it. Number one, it did give them some, their heirs and their estate, huge influx of cash that they could use to pay the bills and pay all the stuff that had to be paid, and allow the business, whatever the holdings, assets, to be held intact. But also they would borrow against the cash value of the policy, not take the money out. I saw that sometimes, but really they would borrow against the cash value of that policy, and they would get a third-party loan that would give them, how do they do this? You might know what I'm talking about. They would get a separate term life policy for protection of the lender. The lender would give them money based on not just the cash value. Here's a little caveat here. If they had other assets like land, they would collateralize the loan with the land and give them, to let them borrow up to the full payout value of the whole life policy, not just the cash value. And I'm like, man, that's freaking ingenious. So now I, of course, I've done that. I know other people that do that too. So I just want everybody who's listening to pay attention here. Some early days, I heard people saying, well, don't get whole life, it's too expensive, and it's not an investment thing, it's just an insurance thing. Come to find out, that's really not true. It's like what you just described there.
It's not true. First of all, it's not an investment. So when people say that, I was like, no, you're right. So when you're looking at it, because the question I ask people is, sorry to cut you off, I get excited, is where do you store your cash?
Yeah.
Right? So what do you compare it to? Savings accounts, CDs, money market accounts. That's where people store cash, right? And so when you look at that, then you look at benefits, access to your capital, uninterrupted compounding, meaning this. So if you have, let's say, $20,000 in cash and you put it on down payment on the house, you say, oh, I got the house. What's the rate of return on equity? 0. Okay, equity has no rate of return. So when you look at that and see the other things, so what people do is they look at one thing, but they don't, the missing ingredient is opportunity cost, right? So you got, the money is, well, see, what would the money been worth had you not tied it up? So what if you could do both? So what the whole life does, it's still in the policy earning 4%, and then you can collateralize the cash value to use it in the real estate. So it's both. It's just like and when you collect your rents, or if you flip a property, well, where does it go? Is when you get paid, it's going into somebody's bank. Why not yours, right? 35% of every dollar leaves most people's personal economy in the form of debt. So banking, specifically, banking is a process. It's not a product, right? And so it's to be clear, because I heard I could be a bank. No. So all the compliance people, no, that's not what I'm saying. All right. Banking is storage, right? Banking is creating a pool of capital that you control that can move at cost to meet some needs you have. So it's really just a system of cash flow management, because most people just give most of your money away. So one of the work of things I do is that I help people you got to become more efficient. See, most wealth is lost by how people manage cash flow. And 2 is through transfers, right? How you taxes, how you pay your mortgage, how you fund retirement plans if you have one, how you pay for kids' education, and how you pay for major capital purchases. So a lot of winning is not losing.
Yeah.
Okay. And so whole life, and then and you look at all the people, if you break apart, banks store their money in whole life. That's their tier one capital. So if you look at a 1003, a mortgage application, what do they ask you? How much cash value do you have in your life insurance? They treat that as reserves. You can do a collateral assignment. You don't have to take a policy loan. You could go to a car lender and say, look, I got 50,000 cash value, and they will it's just a piece of paper. And if you default, they'll just pull the money out your cash value. So they'll give you great rates because that's a very safe loan. Insurance is an asset. I didn't really go there on insurance, but you brought it up. It's an asset class, right? And so all rich people own whole life. Okay. Yeah. And because I work with Kim Butler, which is part of the Prosperity Economics movement. So if you look at some of Kiyosaki's early stuff, she was on his stuff. That's where I started to hear about it, and I started to realize, wait, what I do and what they're talking about is different, and that started my journey to leaving the dark side, because I was evangelical about buy term invest the difference, paying off your house, doing bi-weeklies, all that stuff. I did all that stuff, and none of that stuff works. Which is a whole other conversation, but it is the foundation of which, if you want to have somewhere where every year you're better off than you were the year before, then you use permanent coverage as your foundation, whole life. So specifically whole life, not index universal life, and that's a whole other show, but but it's just storage. But here's the point, you're going to make your money in the stuff you do. Yeah. You don't need insurance to make you money. You're going to make your money doing what Gary taught you. Okay. And you just need a place to store the cash that's safe, that's credit protected, all that stuff.
Yeah. Hey, I tell you what, this is really good stuff here. Now, here's the interesting about this too is I'm going to let you talk about it, but I'm pretty sure I know the answer. It really doesn't matter so much about the time frame where, in terms of economic cycle, we're up, we're down, whatever. I mean, these principles are applicable whether we're in a market like we're like up at the top of the market, or that thing. I mean, that's true, right?
That's why you want it based on principles. Markets go up, markets go down, markets go sideways. So you have to have a plan that works no matter what. I call it the ideal plan. So if you want to build an overall plan that works no matter what, I said there's 4 principles. See, I'm a principles guy, right? Yeah. It's 4, so you got to build maximum wealth, right? So if and so most people think the key to growing their wealth is to find better investments that pay a higher rate of return. But the only way to do that with the way you're taught is to take more risk. Right. But you can't control rates of return, but you can control how efficient you are, how much money you waste, Principle 2 of that strategy of what I call the plan that works no matter what is to be able to utilize and enjoy all the wealth you've created. Now, I don't believe in life deferment plans. I want you to live the best life you can today. 3 is involving legacy. You want to be able to transfer your wealth to your family and to charities that are important to you. So you want, your strategy needs to allow you to be able to do that. And then 4 is that it has to work under all circumstances. So if you look at, when you look at that, okay, here's your criteria for a strategy or for a plan, then what does that? Well, the 5 principles I talked about earlier in the show will allow that. So again, it has nothing to do with what I use a golf analogy. It's not the clubs, it's the swing. Yeah. Right. And so everybody wants better clubs. I tell my clients, listen, if I could give you Tigers clubs, you could go and play in the Masters golf's most prestigious event. And I got 2 things to give you, but you can only have one. I can give you the clubs of any of the best players on the tour, or I can touch you on the shoulder and give you their swing. Which one would you rather have? Right. You should say the swing. Right. Right. And Curtis is the swing coach, just so we're clear. I sell clubs. Okay. Whole life's a club. But it's about the swing, the process, because they don't work like Gary and I are talking about out the box. You got to work with somebody that knows how to make them do what I'm talking about. And so that's critical, and the right stuff, because they're, that's because everybody's most people don't know how to do it. Most agents don't know how to do it. So your friend, your cousin, whatever, they don't know how to do it. Okay. Because if he doesn't hit you with a book, read this, watch this first, they ain't doing it.
Right. Hey, so actually, this was a good lead into kind of a scenario case study. I'll give you. So he told us about the client out at Birmingham. So I'm just going to give you two kind of scenarios here and let you kind of compare and contrast of people that might come to you. So, for example, a lot of my followers they're practitioners. They're in the dental field. They're in the chiropractic field. They have their own practice, maybe 2 or 3 practices, and they're really usually like their mid to late 20s, early 30s are really hitting their stride. The business is established and maybe have a second office, maybe own the building they practice out of. Another case study would be like a teacher. Teachers aren't known for making as much as orthodontists, for example, but teachers typically are really good custodians of what they have. I mean, they want more, and it seems like they're good stewards. But if both of those folks were to come to you, kind of paint a picture. We got about 5 or 6 minutes.
Okay.
If it's okay.
All right.
Kind of compare and contrast how
it's, it's funny. It's the same, right? So let's say if they're making $20,000 a month, let's say. So then this is right, because what happens is if you think about, you've got debt, you've got what's the arbitrary cost, $100,000. You've got all of these things that you're financing. So you're making money, but you're transferring your wealth away through the financing. So what if you could pool your money in an entity that allowed you to be the bank, right? So we've had people, capitalize their bank, which means you might have to put some money for 3 or 4 years. So I've had business owners like that use it to pay their taxes and to recapture their money. They've used it to finance vehicles. They've used it to finance their equipment. So let's say you get enough money in the policy. You've got $50,000 worth of business equipment. Well, if you lease it, that's a wealth transfer. You get to write off, but it's money that's still gone, right? So if you can collateralize your savings, you can still buy it. You can check with your account when I say this. You can still write it off, but you can now, if you, let's say the insurance company charge you 5, but you charge yourself 8. So you can still write off as a business expense the 5%. Now you have to claim the 3 as income. But what you're doing is, instead of that $50,000 plus financing leaving your personal, your business economy, you get to recapture it. Okay. So that's one. With the teacher, I love teachers. I used to do the 403B. And if I could go back in time, I would get them out of all that crap. Okay. Because they're qualified plans, qualified by who? The government, right? So they're teaching you, again, based on accumulation theory, tie your money up in a tool. You can't touch it for 30 years. So now you got summers off. You got all this stuff you could do. What if you could, they don't match you. Okay. So you're just deferring it, right? So what if you could put it somewhere where you could get a safe rate of return? You could use it. You could collateralize it. You could take your kids to Disney World. You could get a car. You could, you could use it, put it back, use it, put it back, send your kids to private school, put it back, turn around and use that same money for college, and it's invisible to FAFSA. So it's really about utilization and recapturing transfer wealth and not tying your money up in one vehicle to only do one job, and just having a more holistic approach. So if a teacher, you're making $4,000 a month, can you save $400? I mean, the same money. I'm just saying change the location of where you put it, but the strategy works whether you don't have to be rich. If you work at McDonald's, can you save $200 a month? Boom. I don't care. I don't care what you start with. I just care that you start, and then I'm going to give you some homework. You're going to read a book a month on money so we can grow your knowledge up, and then they'll make more sense to you.
Yeah. Well, I love it. I love everything you're about, what you're doing, because you're helping a lot of people. And what a famous story I remember, man, I think it was in a book, The Millionaire Next Door. Maybe that's where I read it. It was a case study of a lady. She worked in the cafeteria of the public school, but she was disciplined. She saved and invested from day one. And when she retired, she was like a millionaire. And when she passed away, she bequeathed it to the local community to provide scholarship funds for kids who wanted to go to school and didn't have the wherewithal to do that. I thought, what an amazing story, man. It just goes to show you. I mean, people who know me, I didn't, when I was a kid, man, I wore Goodwill clothes. One time I was on a school lunch program for a while. I wasn't born with a silver spoon in my mouth. Right. I was blessed that my college roommate, his name was Socrates. His dad was a Greek immigrant. He was a big investor and taught us how to invest. So I was young enough to know, Curtis, that I didn't know that maybe I should be fearful. I just thought, well, he's doing it. It's working. I can do it too.
Yep.
And so thank goodness for that one lucky break. Everything else is just good old fashioned hard work. But it just goes to show you, I mean, I'm living proof that I don't care if you're a teacher or a heart surgeon, it's what you do with what you got. And you want to use Curtis's philosophies and these principles. So Curtis, for people who listen, I think they're probably going to be interested to learn how to get a hold of you. Is there anything like a special article you've written, or a small book, or a website they can go to, or you got your own podcast? I mean, how can people?
Yeah, so I give away, so two things. I have a podcast, so I want you all, you hear me interviewing great people like Gary, who was on my show last week, but where we talk about investing as the 4 asset classes: business, real estate, paper assets, and commodities. So we talk about that on the show, and where I try to interview experts, and we talk about ways to create velocity, cash flow, the banking system. There's a book we give away called The Financial Planning Has Failed. So where we show why typical advice doesn't work. And what is the site? It's in the show notes. I sent you that. It'll be in the show notes. Okay. And also, you can text cash flow hashtag ebook to 27686. The show is thepracticalwealthshow.com, or if you Google that, you'll see the podcast come up. So please subscribe, listen, like, and share. And then you can check out practicalwealthadvisors.com. And in it, it's a little, 12, 15-minute video that kind of introduces our process. Okay. And of what we're doing and looking at it from a macro standpoint. And then from that, if that intrigues you, it'll put you on our mailing list so you can see what we have, what webinars we have going on. And then if you care to, you can actually click up a site to set up a free, 20, 30-minute strategy session. And I will talk about whatever you want to talk about, no obligation. And, I'm here to help. It's like a change of viewpoint can change your life, and people perish for lack of knowledge. And I think it's hard to win a game you don't know the rules. And so when it comes to money, either play by the wrong rules or they don't know the rules at all. And so the people that taught us the rules are the financial institutions, but the way they taught them is set up for them the way. Their system's set up to transfer your money to them. So they create the situations, control the outcomes so that they profit off of not completely understanding the game. So I am passionate about teaching people the game and getting in control of your money.
Exactly right.
That's what we talk about. I mean, that's the key. Yeah. And just being a good steward, because here's the thing: if you don't know it, you can't teach it to your kids. So we're big on legacy. Yeah. Passing on wealth and the wisdom to go along with that wealth, because a fool and their money is soon parted.
Yeah. I agree. Absolutely foundational. So Curtis, I just want to say thanks from the bottom of my heart. And I think I speak for a lot of viewers when I say thanks for sharing your wisdom with all of us. And I know your time is precious, so your time is even more valuable than money. So I think you're probably going to get a few emails and phone calls after this, because I know what you're doing, and it sounds like, and I've seen it firsthand, guys. I'm living proof. This is the real deal, and Curtis is a real guy, so I'll be out in Philly here by the end of the year. I'm going to look you up, man. We're going to catch a Sixers game. Well, won't be able to see Sixers by then, but
maybe. Let me see, maybe. Well, it'll just be starting. This time next year, it'll be starting, but it'll still be, if it's the end of the year, you might still be able to catch it.
Yeah, there you go. Yeah. So. And for everybody listening, God bless you and your families again. Take Curtis up and go check out the website, get the information. And also, if you haven't yet subscribed to Real Estate Investing for Professional Men and Women, please do that. And become a member. Go to the My Investor Services website, get all the free stuff there. Click on Become a Member, and you can participate and network, get some money, get some properties. It's a great way to do this with other people just like you and I. We're professionals and we're business owners, and we just don't want to get caught up in all that late night guru stuff. I'm not saying it doesn't work. It's just not our style. This is the folks I've known who've done well at this, do it this way, So God bless all of you. We'll see you next week. And Curtis, God bless you too and your family. And hang on to just 1 second, okay?
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.